Hey everyone, in today's video, I'm going to walk through Cathie Wood's updated Tesla price targets, okay? I went squirrely-eyed, I will tell you honestly, I went squirrely-eyed looking through her mathematical calculation because she's gone through 40,000 simulations, but I'm going to digest it for you so that you can understand it. I'm also going to reveal what I found that was a bit surprising about this model, and then of course I'm going to give you my closing thoughts. So if you are an aspiring Tesla investor, or you already own shares of Tesla and just want to know a bit more about her model and what was a bit crazy about it, or you know what, you just like watching my videos, then be sure to stick around because we're going to have a ton of valuable content for all of you. Now, before we dive in, I want to just give you a quick definition of the Monte Carlo simulation, which is what Cathie Wood used to calculate her price target. It really is essentially a fancy pantsy, I don't think that's a word, but fancy pants way of calculating the price target for Tesla by simulating many thousands and thousands of scenarios. In fact, 40,000 scenarios she simulated, and based on 35 different inputs like profit margins, like the amount of capital that Tesla gets, how efficient they are at using the capital to build their factory. So there's a lot of different inputs, and they simulate all these different types of scenarios and then come up with a range of price targets. So last year, Cathie Wood had ran a new model for Tesla, and at that time she was saying, okay, well, the expected value for Tesla would be $1,400. That was last year. Now today she has doubled her price target to $3,000, and I was just like, holy smokes, what would have caused it to like pretty much almost, well, more than double? And that's like more than even double my price target. And I thought, like, I mean, of course I'm not Cathie Wood, but I didn't think I was that far off. So here's what was in her model. She had 34 different inputs, and she did 40,000 simulations. Now the basis of her simulations is made up of 4 core parts. One is ride hailing, okay, using human-driven ride-hailing service. The second one is robo-taxi, which is literally saying that the cars will drive itself and pick up people and make revenue as a taxi service. The third one is, of course, the massive production of electric vehicles. And the fourth one is insurance. You'll find out that insurance is actually not a big portion of the revenue, but she did include this in the model. And now in her most bearish case, she does say that like with the rights law, the gross margins never exceed 40%. Also in the bear case, she also doesn't include like the full self-driving, like robo-taxi network, which is good, but she does include some human-driven ride-hailing service. So this is going to be important when I talk about like some of the things that are really surprising in her model. Well, in her bull case, this is like, you know, really good. She has the gross margins never exceed 25%. She does include, of course, human-driven ride-hailing service, and of course, she includes like full robo-taxi mode in the price target, and that the annual production rate of all the factories is hitting like max capacity, which is 90%. So that's like an example for the most bullish case. Okay, so I want to share what was a bit strange, maybe a bit crazy about the Cathie Wood's model. Now, I love her to death. I'm just saying, I gotta be transparent here. The model did have some crazy simulations, okay? So she provided a snapshot of 5,000 simulations. So I quickly went through, like, I was curious, how many cars are produced in all the simulations? And I saw some pretty crazy numbers. So just to give you a bit of context, the entire electric vehicle annual production rate of the entire world, like total addressable market, is 40 million cars. Okay, 40 million electric vehicles is the total addressable market for selling that many cars, okay, per year. Now, so that would mean that there's no way you can produce like more than 40 million cars. I mean, who would do that? Well, in her simulations, she did have some simulations where it was more than 40 million. We had 50 million. We had 90 million cars produced. So this is where there's a bit of an error in her model, because her model was going off, hey, the more capital Tesla has, the more they can build factories because, you know, you have more money. So technically, because you have that much more money, you could produce that many more many more factories, which can produce that many more cars. But there was like no, I guess there was no boundary to it. Okay, so they had some simulations that had Tesla producing 90 million cars, even though it was a very small percentage. it was still there. Okay, so that I found a little bit strange, like actually pretty crazy, because that was more than the total addressable market for the electrical vehicle business in 1 year. Another strange thing I found in her model was that she included a $15,000 car, which Elon has never said that they're going to produce a $15,000 car in the next 4 years. Now, of course, this could happen, but I just found it strange that there was a $15,000 car in there. Now, whether this actually happens, I mean, I have no idea. I know for sure that there's going to be likely a $25,000 car because Elon has said he's going to do that, but $15,000 car I found a little bit strange to include in that model. Now, another thing that I found a bit surprising was insurance, okay? Because insurance actually doesn't take up a big proportion of the revenue. In fact, it takes a tiny, tiny slice of Tesla's future revenue. So instead of including all the other services, she included insurance. She excluded energy. She excluded like licensing the full self-driving feature to other manufacturers. She excluded like building batteries for other car manufacturers. She excluded like providing manufacturing to other cars. Now, maybe all those types of revenue sources wouldn't be such a big deal in the next 4 years because the whole mission of Tesla is to produce as many cars and to make it sustainable and really focus on battery production. But I just found it strange that excluded all these other revenue sources, even like selling apps on Tesla's software. And because if they're going to produce that many cars in like 4 years, it makes sense that they could sell like apps. But anyway, or charge for supercharging network. But anyway, she excluded all those other revenue sources. So I'm not sure why, but she included insurance. In the end, I think the biggest, craziest thing I found in her model was that 50% of the market cap that Tesla's going to have in 2025 is made up of ride hailing. Okay, either it's a human-driven ride hailing or it's a robo-taxi network. So that's why the model is a bit, I would say, very, very ambitious. I would say that overall, a huge proportion of the revenue sources is coming from some sort of ride-hailing service. So this is where it gets a little bit strange. But there is one thing that I thought would really, really actually makes the model overly conservative. And this is her revenue multiple, okay? So she added up all the revenue sources from, the ride-hailing service, the robo-taxi network, the electric vehicles, the insurance, and then she used an EV over EBITDA, so 13, which is the equivalent of like Chrysler or Volkswagen. So her revenue multiple of EV over EBITDA, which is like the enterprise value divided by the earnings before interest and taxes and amortization, depreciation. She used 13. Now 13 is like insane because we got Volkswagen, which has an EV over EBITDA of 13. We also have Chrysler with 13. Do you think Tesla deserves the same revenue multiple as all these ancient dinosaur car manufacturers? Which is like, no. So bottom line, the craziest thing about her model is that up to about 50% of the market cap for Tesla in the future is made up of the ride-hailing service. Now, this is huge because either you believe in it or you don't believe in it. And that would really, make up your belief about that price target. So if Cathie Wood is giving a price target of $3,000, so what does that mean for you like today? Okay, so if you had a targeted like return on investment like of 20%, it would mean that Tesla could hit $1,400 this year because you take $3,000 divided by 20% every single year until you get today's dollars. What's another way to view Cathie Wood's price target of $3,000, which is the expected value? And remember, we already discounted that back to today's dollars. So if you wanted a return on investment 20% year over year, that would mean about $1,400 for today, okay, 2021. So how does that compare? So looking at Wall Street's projections, according to this Barron's report, it says that Cathie Wood's estimate is actually 15 to 20% higher than the most bullish Wall Street projection. Now, these are comparing to some of the analysts who've been following Tesla for a very, very long time, like Adam Jonas, who has a bull case target of 1232. And then we've got other analysts from RBC called, his name is Joseph Spack, and he's actually the lowest out of the three at $700 a share. But you can see that there is quite a range, and even Cathie Wood's price target is more bullish than the highest price target in Wall Street. But I mean, Cathie Wood has been right in the past, so she does include pretty crazy ambitions for Tesla, but at the same time, we have no idea. In 2025, anything can happen, especially if Tesla is going to get full self-driving, like feature complete, like meaning that they won't need a human to drive the car. Well, then Tesla's market share is going to explode. We can't even put a market cap on that because that doesn't even exist right now. Now, whether or not you believe in Cathie Wood's pricing model and her ride-hailing scenarios and her robo-taxi network, take that all away. I think the best way you could think of Tesla, you should ask yourself, do you think Tesla will be one of the biggest companies 10 years from now? And this really has to have, you really need to believe that the engineers in that company can break and solve full self-driving feature and have regulations accept full self-driving in the future. And as you can see, several states in the United States have already accepted this. So it's a matter of, what do you think is going to happen 10 years from now? And personally, me, I have an insanely hard time thinking what the market share and the market cap could look like for something as transformational as full self-driving. I mean, just imagine your car driving for you, your car picking up your parents and bringing them to your house, your car picking up your kids from school and bringing it to your house. Like, life is going to be completely different with full self-driving. I think that alone is going to explode Tesla, but you really, really need to believe that that problem can be solved. And personally, as an engineer, I really believe they can solve this.